Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, overnight, fresh US economic data generated certain moves for the Australian dollar and the euro, and especially the sterling. After April's producer price index, or the PPI, showed a notable 0.5% increase, surpassing expectations of 0.3%. This rise, driven by higher costs of services and goods, initially impacted the market negativity. However, the impact was migrated as March's wholesale price reading was revised down to 0.1%. Additionally to this, they also reacted to comments from US Federal Reserve Chairman Jerome Powell, who suggested during a panel discussion in Amsterdam that the central bank will need to exercise patience in response to higher than expected inflation. Powell reiterated, though, that the US central bank is unlikely to raise its key interest rates in response to persistent inflation. Traders are expected to proceed cautiously in response to this report as they await the more closely watched Consumer Price Index, or the CPI, which is scheduled to be released on Wednesday. Turning to the technicals, we can see that the Australian dollar has improved to the upside and now looks for a bullish break, and that is clearing 66.2025, which just about has moved now. That could see further on to 66.8090 to 67.45. I do like the way this pattern has formed, and along with that, the RSI bearish divergence has been negated. So with the market holding relatively firm, any pullback is likely to be shallow, and with a base holding near the 60-day moving average at 65.4550. So as the bulls gather, the euro is set for a further break. That is above that 108.2025 level that's been somewhat holding for a while now. Nevertheless, with the dollar index, which measures the greenback strength against a basket of 6 major currencies, weak at 105 figure, could see further gains. And along with that, still looking to that confirmation to the bearish outside range day for the greenback. But I do like the way this trend is forming, and therefore could look from the break of 108.25 onto the region of 108.70 to 109.25, with any pullback likely to be shallow and a base seen around 106.60-65. The dollar yen, the market's grinding higher but still struggling from what I feel can eventually see a downturn and look towards a region that is of 155.30-35 as the bearish trigger. If pulled, then looking towards 153 or down to the 150.5 to 151.5 objective. With the ADX overheating, should support further risk to the downside, and also along with a mixed MACD could draw the bearish case a little bit to the firmer side. A bullish case came through for sterling since posting this outside range day a few days ago. Has continued on and posts another engulfing candle and now looks towards a key challenge of 126 figure 5. A break there would give further scope on towards 127 or maybe even 128, with any pullback likely to be shallow, support seen around 125 figure 15. From the data in the US, that is the PPI, and now awaits the CPI, the market was a little bit to the firmer case for spot gold. As we see now, the market looks towards a challenge of 2,362 to 64. I do feel from a technical pattern, though, the market is still a little bit to the weaker side. So at present, I have little view to the upside, but more so waiting for the break of 2,336 to 38. Such a move would expose the region of 2,300 and reassess from there. The bearish case still maintains, I feel, for oil, and therefore could look for a further down test and on towards the region of $77.65 or lower down towards 76.40-50 area, and with the upside resistance seen at 80.25 to 45. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the day.